All right, end of the week. Non-farm payrolls came out 10,000 lower. Not really a miss, but the unemployment rate came in 2/10 lower, which is a good miss. It's good for the economy, good for stocks. They rallied. They held on to the rally as we speak going into the European close. They're on their highs. Kind of a relief rally that may be in an important data point. While growth might slow, it doesn't have to slow to a recession. Plus, they get the other side of keeping the probability of a rate cut higher with some of this bad data. And so we jump from like 45% chance of a quarter cut to 80% chance roughly of a quarter cut at the October 30th meeting. That's important to understand as we leave this week going into next week, including U.S.-China trade negotiations get back here in the U.S. October 7th. So next week could have a lot of tape bombs, headlines filled with moving us. Now, the highlight today was, again, comparing and contrasting. You watch all my YouTube videos. There's some semblance of either order flow or intermarket correlations. This one had both. The Russell was weak, and when the Russell goes from weak to strong, and you see buying come in that kicks the market up in another one, or selling come in that can't get it to go down, or both, that's turning two things or overlapping two things together. The one thing is order flow. The other thing is intermarket correlations. These are going to be your best timing mechanisms to get long or get short is in that overlap. That's your zone. Everybody needs this zone. Everybody needs this zone. It's got to be an integral part of any strategy you try to implement, whether you trade stocks or options or futures or Forex, short, medium, or long time frame. All right, so we had this instance about 5 minutes before 9 o'clock Central Time. We had the Russell. I'll bring a chart down of the Russell getting weak, staying weak, and walking down. You also see that in the dials that we have along the left-hand side. And these dials give you a sense of, hey, why is the orange one, the Russell, all the way to the left? It isn't now, but it was right in here. And then you got a couple big moves, like when I say big moves, where it quickly goes up like that. Look on the right side of this chart. Quickly goes up like that. It's not only that an ancillary stock index jumped, it was the fact that it was weak and it jumped. That's the key. Then you take a look at a footprint of the ES around the same time. I rewound it, and you see buying come in with these greens, and it actually goes up. When buying comes in and it goes up, it's supposed to. If selling comes in and it doesn't, it's a head scratch moment. Either way, these are the things you want to see and be able to time all together. This is data that's not hard to absorb if you're privy to it, if you understand it's what you're supposed to watch. That's why I created these dials. It's not some phenomenon that's new. It's just that, to me, it's an easier way to see the same thing. Absorb data, right? That's why all your dashboards are dials and instrument panels for pilots are dials. Better way to see and compare contrast. And so you got this dial right in here, which is the ES. This is the Dow. This is the Russell. This is the NASDAQ. Simple. Last 5 minutes. What are they doing? So when you see one spin, you want to be able to see that, understand that. You don't make a trade every time you see it spin, but you do want to be able to absorb that data. That's like your rear view mirrors when you're driving a car. And if you're a good driver, it's because you know what's around you at all times. When you're a crappy driver, you react all the time without knowing someone's in your blind spot, without knowing because you don't check your mirrors, without knowing someone's right behind you, without knowing you could scoot over to the right and not end up in the guy's backseat, with anticipating that the guys in front are slowing down, the guy in front of you is slowing down or stopping before because he's an idiot, can't stop. So just make sure you guys understand correlations are the name of the game. Order flow is the name of the game. Everything else you could throw out. Everything else you could put in your garbage. Take all your books on your shelves and put them in the garbage can. Take it out for garbage day and let the garbage man read them. Open up a trading account and trade against him. There are some good books out there, but 90% of them suck. It's an industry term, suck. So the Russell's important. Sometimes it's not. Sometimes it is. Dow, NASDAQ, individual stock. You want an edge? do what most people don't. Do an internet search of intermarket relationships as to how it helps swing traders and day traders. And you'll see no one lined up to teach it. So you want to learn what people aren't learning because they just don't know what they don't know. You guys have a great weekend. We'll see you Monday. U.S. China Trade Talk start.